Well, with me in the studio is the businessman and entrepreneur James Woods, who represents Malawi on the Business Council for Africa here in the UK. Thank you very much indeed for coming in. On the ground level, what's likely to be the reaction of ordinary traders and businessmen to this move? Because most of what they actually sell comes quite cheaply from places like China. I mean, will they see this free trade zone as a new opportunity and an added advantage for them?
Well, we'd have to say you raised a very good point and talk about China, because you look at China, about 17% of the GDP is actually put towards exporting goods, which the local markets within a lot of African countries utilize. So I think for the manufacturers, local businessmen, and a lot of these countries in Africa would take this as a great opportunity where they can actually scale up their production, look at opportunities outside of their own countries. The agreement itself has been signed today. As we said, it's going to be ratified by Parliament later. But what it does do, it takes away about 50% of the customs duty taxes on that. So at least for that, it's a lot easier for somebody who's trying to export their goods. Secondly to that, if you try, when you try and import goods in Africa, it's cheaper for you to go to Japan, bring a car to Malawi, for instance, as compared to going to South Africa, bringing a car. So what this does is that it allows you that easier access of goods, creates a bigger market for you. But then there is a question as to whether the goods you're actually producing are of value to the external bodies you're sending them to. So though it's an exciting time, it gives you access to bigger markets. It gives you access to, we can say, the bigger economies. But we still need to also ensure that the goods that are being produced, they actually value to those economies.
Because at the moment, only 12% of African trade is within the continent itself. But the question I'd like to ask is, what will be the hurdles and the challenges that will need to be overcome? Because, of course, African countries are all operating at different levels of sophistication, and all the economies are different sizes.
Yes, I think that's a very, very fair point. But just before I get to that point, we can look at just a regional body as such, COMESA, which is part of the 3 regional bodies that have signed the agreement. Egypt, before it was part of COMESA, was bringing in about, in terms of exports, was bringing about $400 billion, sorry. When they joined COMESA, that in 2014 increased to $2.2 billion. So it shows the aspects of when you become one regional body that you can increase the trade. But now when we look at trade within Africa beyond that, it's only 12% occurring between these countries. It does bring a bit of a problem, as I was mentioning earlier, that with this trade, are we producing the right sort of material that other countries will find of value? Africa itself is still very much a very big importer of goods. So I think there has to be a quality of the produce that's being produced within these countries, so that whereby if we are producing locally, we're meeting certain standards. So we can't just go on talking about this. But now the biggest challenges we'll face are, number one, politics. There has to be a very big political will within these countries. Number 2, the aspect of corruption. Corruption itself is a very big hindrance. Though it sounds great saying that we'll open up the borders for this easier trade and cheaper trade, there's the internal problems. If you try move goods from Mombasa to Nairobi, it's extremely expensive. So we have to identify those internal problems.
So infrastructure and so on will need to be taken care of. But what about the fact that there is great disparity in GDP between countries? For instance, you have Mauritius that has about $10,000 a year, and Malawi at $242. I mean, could you have Malawi producing goods cheaply and putting people in Mauritius out of business?
Well, very interestingly, before I came here, I was having a meeting with the British High Commissioner to Mauritius. He's in London. So we're actually discussing some of these points. What we need to remember is that we shouldn't view this as being a competition. What we're looking at is opening up the markets where we can create goods which can actually go to larger economies. So Malawi may not be at an advantage as compared to other countries, but we can identify the areas where we're good at, be it agriculture, be it we have to diversify our produce a bit on what we're producing and sending out. Identify those, work really hard on those, and find the markets where we can send those to. And by working together in collaboration, we're able to actually benefit ourselves and the countries outside. So that'll be Malawi, Mauritius, and the neighboring countries. So I think when you compare larger countries and smaller countries, it's a bit of an unfair comparison, because I believe the smaller countries stand to benefit a lot when they're exposed to these larger markets.
Right. Now, it is rather striking, isn't it, that Asian countries, I think we already talked about this 12% trade within Africa, African countries not trading with themselves. I mean, even travel. is really quite strange that in a country like Nigeria, for instance, to get a flight to certain cities and capitals, I mean, you'd have to go to Lagos or Abuja first and then change, whereas you can go direct to London from wherever you are. I mean, and that is a bit of a problem, isn't it? I mean, that is something that this trade agreement will hopefully address. The question must be, though, where will it all be in 5 years?
Well, I think that's a very key thing for them to address. Traveling, I traveled to Malawi quite a bit. It cost me almost the equivalent of traveling from Malawi to South Africa as it does from Malawi to London. So and that's only a 2-hour flight, that was a 9-hour, 10-hour flight. So there's a very big problem in that. So they really do need to address those problems. But I think that is more long-term issues. That's also an issue of the infrastructure. We're talking about how they can build up the infrastructure. But we're looking at where this will take us in the next 5 years. If everything goes to plan, if we ratify this in parliaments in and across Africa, we hope that the economies in Africa as a whole can actually grow at least by 25 to 30%. So which will in turn create more opportunities for people on the ground, create more jobs. The biggest talking point in Africa is the youth unemployment. This has the opportunity of tackling that. So I believe that there's great opportunities, but before we get to those opportunities, it's those stumbling blocks, so the bottlenecks of infrastructure development, as aspects of political will, aspects of corruption. Those really need to be addressed before we can move.
Okay, but no question about it, an historic day. James Woods, thank you very much indeed.
Thank you.